Welcome to chartingwealth.com for Wednesday, the 16th of September 2015. As we chart the markets, as always, we start with IYY, which is the Total Market Index Fund. It's an exchange-traded fund, and it tracks what's going on in the whole market. And what we see with this head on the snake, the head keeps getting longer. But what do we see happening? Well, we are getting close to a crossover going up. On the two-day chart, we saw our derivative oscillator flip over on this last two-day candle. We're looking at a two-day chart for those who are joining us by audio. What do we see? Well, because the charts are so screwy since the huge drop back on August the 24th, that two-day candle, it skewed everything. So we'll go to the 4-hour chart to give you a little better view. What do we see going on? Well, have to be careful here or I get to that date where everything went crazy and it converts over to very difficult to see anything. But here's what we have. We have a purple line that we drew right around $100.50 on the IYY. It's bumped that a few times on the 28th, the 31st, the 27th, the 9th of September. Those other dates were in August. And we have an up day in the market today. Technically, the IYY was up 1.32%, but look, didn't even get as high as the purple line. Now, you're going to hear everybody telling you, oh, markets are up again. What does that mean? Well, it's very well below where it even bumped up to back on the 31st of August and then rolled back over. Not hugely below that, but 50 cents below it. And so where is that putting us? Well, why is this happening? Well, let's answer that question as we go from the total market back to the two-day chart and over to the SPY. What's that? Well, that's the Standard & Poor's 500. A little bit easier to read that chart, and you can see that it looks like it's getting ready to cross over going up on the two-day chart. What does this mean? Again, we have a purple line we drew here as the ceiling where the market's been over the last many days, last couple of weeks or so. What's really going on? Well, we've got a Fed meeting coming up on the 17th. Now, what does that mean? Well, it looks like if you're reading into sort of what's happening right now, the market's trying to cross over going up, perhaps anticipating Janet Yellen, the head of the Federal Reserve, telling us that they're not going to be increasing interest rates anytime soon. Now, if she says that, chances are this purple line will be a thing of the past and the markets will accelerate back up again. Gold will fall, and everything appears to be setting up to tell us that. Now, let's look at the 4-hour chart on the SPY. What do we see? Well, it's crossed over back a few days ago, going up actually all the way back to the 27th. And again, it's hit multiple times on the purple line that we have drawn. It didn't get that high today, even though it was technically up 1.25%. So what do we have going on? Well, we have the market, it appears, anticipating, but being very careful, anticipating Yellen telling us that interest rates aren't going to go up anytime soon. If that happens, it's probably going to charge through that purple line and go through the roof. If that doesn't happen, well, the market's already told you what's more likely. Huge drops that we saw back on the 4-hour chart on the 24th. Now, of course, when we go to our two-day chart, since it's 2 full days, we can see the major drop occurring on the 24th on that two-day candle, and then sort of a repeat, not quite as bad, the following two-day candle on the 26th. But we've continued to bump against the purple line. Let's see what happens. So we're going to talk a little more, and I think I told you already, up 1.25% on the SPY. Let's look at the Qs. That's the Nasdaq 100, one of my favorite indexes to make money on. I've actually drawn a trend line on this one. We have a decent trend line going up. It crossed over today. Same time that we saw an up move on the derivative oscillator. So when we see the MACD, the Moving Average Convergence Divergence Indicator, don't know what that means, go to our website, learn about it. You can also Google it, MACD. It's on the far left side of our screen for those who are watching the video. And when we see the derivative oscillator and the MACD crossover at the same time, typically a good sign for up movement. Now, even the Qs ended right at the purple line. that it's been banging its head on the last few days. So let's continue to watch. The purple line actually is at like 106.05, $106.05. I think the market closed at around 104. Let's check that out for sure and see what we see here. Looks like it closed at 106.04. Yeah, so right below where we had drawn the purple line. So again, now let's revert back to our 4-hour chart and see what we see. And it's showing it closed a little above that on the 4-hour chart. So again, what we're looking for is whether this movement's going to continue up. We've got a nice trend line that we have drawn. Of course, we're well above that. If we hear that the Fed is going to continue its easy money policy, then I think these charts are very likely to shoot through the roof. If we hear no, I am very sure if they're going to talk about increasing interest rates anytime soon, we're going to see the market take a tank. Now, what they'll probably do is hedge their bets and say that at some time in the future, they might increase the rates just a little bit. How that'll play out is anybody's guess. So what are we doing? We're holding our money tight right now on our virtual trades. We don't want to see ourselves get screwed because we cannot predict the future. We use the charts to help us make important and wise decisions. But on something like what the Fed's going to do, I will tell you what the charts are telling us. Right now they're telling us that it looks like the Fed is going to continue easy money, but we don't know that for sure. How do we also confirm that? Well, if we go back to our 2-day chart and we look over at gold, gold was down 0.30%. We have a nice connected 4 candles, 4 2-day candles connecting the down movement in gold. Crossover today. Derivative oscillator crossed over a couple of days ago. We have the MACD crossing over on the 2-day candle, and we have a negative derivative oscillator. So gold is in a confirmed down move on the big chart. Where is gold on the 4-hour chart? Well, it is in a confirmed down move since the 25th. Derivative oscillators losing some steam. Looks like gold could be getting to the bottom on the 4-hour chart, but maybe not. It's continued to drift down. It's below the 2-day trend line, not significantly below it, but below it. Now, if we read what's happening with gold, remember gold has tended here recently to go down when the market goes up. So what we're seeing is again confirmation in the commodity of gold that its price has continued to move, well, sideways for a while, but down overall. And it also tells us that it looks like the Feds will probably continue their easy money. That's what the markets are telling us. Could they be wrong? Of course they could. So please, again, be very careful over the next couple of days. When we hear what the Fed says on Thursday, the 17th, there should be some reaction from the market, and we shall continue to watch. Hope that this is helpful. We appreciate you joining us every day at chartingwealth.com. You can join us at Facebook and Twitter. You can also check us out on Instagram, and we love to have your comments. We also appreciate you joining us at our website, chartingwealth.com. Sign up for our newsletter where you'll get our daily reviews and our weekly review and forecast once a week. You get our daily reviews every day the market's open. Thanks so much from chartingwealth.com.